Welcome. Thank you for joining us tonight. This is learning session 6. This is the actual last class of Baltimore Means Business. Tonight we're going to be talking about preparing for capital and the essential documentation you need when talking to a lender. We have a fantastic panel tonight. Kaetlyn Bernal, Janice Walker, Jim Peterson, Swann, McKeever Conwell. They were amazing last night. They're going to be great tonight. They will be joining us shortly. I want to make sure that I prepare you for that conversation. A lot of this you already know. I'm certain of it. But I have to level set to make sure we're all on the same page before we have our panelists come and talk. The things I'm going to talk about tonight are, first, understanding your value proposition. And why are these things important? It's just so that you can know how to sound in front of a lender. The same way you have to understand how your customer thinks, you need to understand how a lender thinks. So that's what we're going to focus on in this conversation. I want to make sure you understand what they're thinking, how they're thinking, what they're looking for. So when you walk in, you're not in there begging for money. You're walking in there with a strong value proposition of why they should lend you money, how you guys can have a great business relationship together. That's the vibe we're going for, okay? But you need to have some preparation first. The topics we're going to cover in this really short time: understanding your value proposition so you know how to explain it properly to the lender, knowing your customer and industry, what's your growth strategy, how will you pay the money back, building a relationship with funding partners, and then essential documentation. All key before you walk in the door. So, what benefits do your customers experience? You need to be able to say that in a very quick and efficient manner. If someone says, "What do you do?" or they say, "Who are your customers?" and it takes you 10 minutes to answer, you have it wrong. This should be like a 30-second answer at the most. Okay, so you need to practice this in the mirror. What differentiates your business? We talked earlier on about your unfair advantage, your secret sauce. What is it that makes you special? What makes you better than your competition? You have to be able to explain that to the lender quickly and efficiently and in a concise way. Why do your customers choose you? These are the exact questions a lender is going to ask you. You should know why they choose you, what makes you so special, how you've built a moat around your castle that no one can get by because you're so good at what you do. Knowing your customer and industry. You must know your customer's buying patterns and history. That has a direct effect on your cash flow, which means that's how you're going to pay your bills and how you're going to pay back the lender. If you do not know this, they will not loan you any money. They will not give you any type of credit line. You have to understand, you have to be able to show, remember your cash flow projections. You know when you get paid, you know the kind of money you bring in at different times of the year, and you will be able to pay the bank back as you promise. You should know how big the market is and what is your market share. So going to census.gov, you've identified, so if you're selling to customers, direct to people, go to census.gov, and you know that you're marketing in DC, how many Caucasian women ages 30 to 45 with professional jobs who make over $60,000 are there? You can go to census.gov and get that information. And you know where they are. Then if you do your numbers and you realize, okay, I've got to sell 10 a month and there are 10,000, whatever, with a really small market share, you can be successful. That's a great thing to say to a lender, because if you do better, you'll make even more money. And it's a conservative share of the market that should be easily attainable. Next, what does your competition do well? You should know that. You don't have to hate your competition. If you cannot analyze and take a step back and say, look, they're really great at how they onboard customers. I've been through their process. They're really, really good. I'm using a lot of that in what I do. Not stealing, not trademark or copyright infringement or copying and pasting, or even patent infringement, nothing like that. That's not what I'm talking about. But how they do basic things, you should look at that, like how they do their social media posts, how they do certain things, see how it works for them if it's helping them to grow. What do your sales projections say? We've done the cash flow projections probably 10 times by now. So you should know what you plan to do in quarter one, quarter two, quarter three. 1 year out, 3 years out, 5 years out. Obviously, we can't tell the future, but the bank wants to know that you thought about this. How is your industry trending? Go to bls.gov. Remember we talked about that in the session where we talked about marketing and selling to the business to government. You can look all that up right there on bls.gov and see the trend of your industry in that particular zip code. And then what's next in your industry? You should know this. You can go to your trade associations. You can just Google online. Someone's probably written something. Also, all that other those other market research links we talked about during that class, you can go there and look as well. But you need to know where your industry is. Like if something new just happened in your industry, like yesterday, and you have a meeting with the lender that morning, if they probably just open their newspaper or they open up their computer and they saw, oh wow, there's a huge dip in the stock market because of this thing in your industry. You should know that stuff. Because if you don't, it makes you look bad, and it means that maybe they shouldn't lend you some money. You want to make it as easy as possible for them to lend you money. So you should know your 1, 3, 5 year projections. So we've been focusing on 12 months with the cash flow projections. You know how to take that out further. You just extend it out. Each little box tells a story. We've done that a dozen times. So also by knowing that, you'll know, so look, if I don't get any funding, it's going to take me this long to get to a certain level where I can hire people. That's me putting money to the side, me reinvesting money in the business. Okay. But you can accelerate that growth with a loan, a cash, a bunch of cash coming in at the same time, $50,000. And it's not just, oh, I want 50 grand. No, it's based on my cash flow projections, $50,000 would cover 6 months of expenses. That will allow me to do X, Y, and Z. That will allow me to hire people, to buy new equipment and everything. And then by month 4, we can start marketing. We can be ready to take on these big contracts we have lined up. And that will allow us to not only increase our revenue, but also start paying you back in month 6. Okay. And then in your cash flow projections, that month 6 payment should be a line item that shows, those first 5 months, it was 0, 0, 0, 0, 0, but it's month 6. Now it's that $500 payment that you have to pay for the next 7 to 10 years to pay back the loan. Next, what needs to happen for you to grow? So what happens? So, hey, maybe COVID needs to stop, or even if it does, we need to do other things or look at other industries. That's important. You need to have a plan. How much of your money will you invest? Skin in the game. The lender wants to know how serious you are. You're going to put up your car. You're going to put up the money that you have in bonds. You're going to put up your money in savings to back this. And also, what are your assumptions? So I always say have conservative assumptions that you're going to have, a very low market share. Okay. Because if you can still make money in your projections with a really small portion of the market, that's great. Because if you do better than that, that means you just make more money and everybody's happy. Okay. But your assumption should always be tied to data, not you work really hard and you're a hustler and you work harder than everybody else. That's not going to get you a loan. What gets you a loan is like, look, we have an unfair advantage. We have these people on our team. We have contracts lined up. I just need this money so we can cover enough expenses until we get paid by the government. Make things as certain as possible for the lender, and that allows them to say yes. How will you pay the money back? Very important, okay? So a lender, they want to be paid back with as little risk as possible. And they want you to be able to show you have a vehicle, like the means to pay them back. Either that you've shown that you always make money every month, you've got consistent contracts, your industry is strong, that's great. Maybe you've got contracts lined up with the government and you just need to get some money to tide you over for 90 days until you get paid. Or maybe you've got a 30-day net with businesses that you sell to. Sometimes it goes as long as 40 days. So you need a great credit line so you can cover those expenses and then just pay it back every month when you get paid. But you need to know that so that you can have these conversations with lenders. Or maybe you're working with investors. Now, investors, they don't want to just get paid back a little bit of interest. They are looking for a 5 times or 10 times return. So if they loan you $100,000, they want $500,000 back or $1 million back. And so in your business has to be big enough Your profits have to be big enough that you can pay them back over a certain period of time, and you still have money left over to cover your expenses and have a little profit for yourself, and also have money to reinvest back into the business. And then always talking in what's in it for them. What's the return on investment? What's the risk? Your lenders are thinking about risk. They want to get paid. They're lending out their customers' money to you. They don't want you to lose it or to default. So address that. Make them feel good. Look, I know you're concerned about me paying it back, but here's how I'm going to. I have these contracts. We always make money this time of year. I have these things lined up. I have great credit. Make it easy for them to say yes. And then when you go into a bank, one, you should choose banks that like your industry. Some banks don't like to do business with certain industries. You can just ask them if they normally give loans to people in your industry. You should understand what they want. You could just say, look, hey, I'm planning on expanding next year, next June. I'm estimating I'm going to need about $50,000 to do that. What kinds of things do I need to have in place? Well, look, you're going to need 3 years of your tax returns. We're going to need these kinds of financial documents. Your credit score has got to at least be at 680. And so if you're not there yet, that's your checklist of things to work on. You don't walk out with looking all sad. You make a relationship with that banker and you say, look, can we talk at least like maybe every 1 to 2 months? I'll let you know my progress, where I am on getting these things in order. And then so by June, we'll be ready to go. You're going to say yes. So now I want to just talk. So I know I went kind of fast, but I think those things are pretty simple and you probably are familiar with that. I just want to level set. Now I want to go into essential documentation. And with essential documentation, I want to first talk, before we get into like the list of paperwork, I want to talk about the 5 C's of credit. These are the things that lenders look at before they say yes to you, okay? And also there's a great article on Investopedia, which is where I got this information. I'll share that link with you later so you can go and check this out. There's some good videos too. The first C of credit, okay, so these 5 C's are what how the lender looks at and they evaluate you before they say yes or no. So the first C is character, which is really your credit history. Do you pay people back? Do you pay them back on time? So they look at your credit bureaus, Experian, TransUnion, Equifax. That tells the whole story, okay? So if you've had bankruptcies, collection accounts, liens, whatever, that stuff stays in there 7 to 10 years. I know you know that. So you should start trying to clear that up. Right now, at least from what I'm hearing from lenders, you got to at least be at 680. I think they even prefer maybe as high as 700 to kind of even walk in and even have a conversation. So if your credit score is not there yet, you need to make that a priority and start working on that, because it's going to stop you from growing, okay? And we are going to talk about, and the reason why that is that most traditional banks they want you to be the guarantor, the personal guarantor of your loans. We're also going to talk about business credit, which can be another option for you as well. As Kelly Swann will talk about that. But as far as your credit score, in particular, just to make sure that we're all on the same page, the elements of the credit score that you need to understand, and you can then do something about it with your buying, your payment behavior, is one, your payment history. 35% of your credit score is weighted based on you paying your accounts on time. So obviously cash flow is always an issue. So you have to just really make sure you manage that appropriately. If you do not, you're hurting your chances of growing, because we all need access to capital, okay? Next, amounts owed. You can control this, okay? If right now things are really good, see if you can get your lines of credit increased, because if, usually it's best to have under 30%, as far as using your lines of credit. So if you increase it, obviously that'll decrease your percentage of use. So while things are good, see if you can do that. If not, work to get those numbers down, because this is also weighted very heavily at 30% of your score. So how much you owe and what percentage of what you use, take a look at that. Length of credit history, this is 15% of your score. Old accounts, new accounts, how many are old, how many are new? When did you establish these accounts? When's the last time you used certain accounts? All very important. Number 4, your credit mix. You don't have to have all these things, but showing that you just don't have a credit. I mean, you just don't have a car loan, right? You've got other things. Maybe you own a house. You have a few credit cards you pay on time. Important. It's about 10%. And then new credit. It's very scary for a lender to see that all of a sudden you just open up a whole bunch of new credit cards. Okay, so you have to be really strategic about when you open up new lines of credit, get new credit card accounts, because that can reduce your score. You're probably familiar with this, but I just want to make sure we're on the same page. The second C is capacity. Okay, and this really relates to your debt to income ratio. So how much money do you make a month versus how much of your total debts, your total debt payments you have in a month. Okay, so if you bring in 10,000 and you spend 10,000, that's bad. But if you're bringing in 10,000, you only have about 3,000 in expenses, that's good. Okay, so obviously work to make more money, but also work to reduce the amount of debt that you have. It's all strategic, and you can affect these things so you can get access to capital. Next, capital itself. Do you have any money to put down? Especially if it's, being able to show you have skin in the game. A lot of lenders look at this like, how serious are you? Collateral, once again, showing how serious you are. Now, if you're taking out a secured loan, obviously that goes right to that car, that house, or that equipment. But if you can do things with the bank to show, I'm going to keep a certain amount of money in the bank, I'm going to, maybe buy a bond or something like that. The thing is, or that you actually have collateral you can put up. Like you can put up your car as collateral so you can get this business loan because your car is paid off. Great. It shows you skin in the game and you're very serious, and it's probably less of a chance that you're going to default. And if you do, then they can sell your car. They don't want to do that, but they will if they have to get some of their money back. And then number 5, conditions. So understanding that this varies. So depending on the state of the economy, industry trends. So like if your industry is doing really, really well, great. If it's doing really poorly, it's not so great for you. And the lender is going to be a little hesitant. Any legislative changes that are happening, banks don't want to lose money. So they're looking at how things are happening from administration to administration. Okay. Also, how much money are you trying to borrow? What's the interest rate that you can qualify for? All those things, of course, affect your payment. And then the last thing with conditions is how do you plan to spend the money? Not just, I just need about 50 grand and that should cover it. No, here's my cash flow projections, right? And this is exactly how much I need based on, over the next 3 months until I get paid by the government in month 4. This will cover me and cover my payroll. That's the kind of things that banks look for. They want specific reasons why you need this money and specifically how you're going to pay it back. Now, finally, I know I went really fast, but now we're at the last part. Essential documentation. And I know you guys have these things because we've been talking about them, but just to make sure we're on the same page, these are the things that normally banks look for. So if you don't have this stuff, now you can start to pull this together before you go in to talk to a banker. If not, you're just going to prolong the process and waste their time, waste yours as well. Also, you should have an accountant and let them know you're going in to have this conversation with a banker because they need to be on standby to give you this stuff. You may not have access to your profit, loss, and balance sheets. They may need it signed by a CPA. So before you go in and have that conversation, you need to show you're ready. Oh yeah, that's no problem. Here's everything. Here's a whole packet my accountant prepared for this meeting we're having today. And what you should have like any of your business registration documents. You should have your loan application completed, your personal ID that's valid, right? I'm hearing now 3 years of personal taxes, 3 years of business taxes, 6 months of personal bank statements, 6 months of business bank statements. Of course, keeping your business and your personal transactions separate. We talked about this, right? So if you need $3,000 a month to cover your expenses, you should transfer that out of your business account into some other account. So all your little subscriptions and stuff or whatever aren't coming out of your business account. That are personal transactions. You can make that happen. Okay. Next, your business plan. you're going to hear from Jim later on tonight. He loves business plans. He wants to see a business plan. Some lenders, will say, oh, you've been in business long enough, you don't need it. Like my company, we write lots of business plans, usually when people want to get some type of funding. So having a business plan with your projections, your market research, some competitive analysis, really all the same things we talked about in the presentation you're going to do on next Monday, that should be in your business plan. If you have any collateral information, right? If you have a car that's paid off, equipment, things you can sell if you need to, great. If you have a co-signer, someone else who's working, great. If you're going to use the vehicle as some kind of collateral or equipment, you should have a clean title and proof of insurance. Summary of the use of funds. So this is what I'm going to use the money for specifically. And then often they'll ask for some kind of management resume. So if you have a partner, how is it that you guys can open this restaurant if none of you know how to cook? That's scary, right? But no, my partner, who's owner of the business, has 20 years of being a chef. Oh, okay. That makes sense. And then your profit loss statements, balance sheets, ideally prepared by a CPA, so it's right. And they may even ask that it's even signed off by a CPA. So I know I went through those really, really fast and we're on time, so that's great. I wanted to make sure that I covered these things before we brought in our panel, okay? And so let's do a quick, we're gonna go right into, since we're right on time, let's just make sure everybody's here. For tonight, these are our panelists. Or actually for this week, we've had Kaetlyn Bernal, Janice Walker-Emeogo, Jim Peterson, Kelly Swann, and McKeever Conwell. They've been very gracious to share their expertise and their experience with us this week. Now we're going to go into our panel portion of tonight. Just to kind of kick it off, let's start off with really just introducing yourself, like what you do and the kind of services you offer, maybe more established businesses in relation to accessing capital, okay? And so I'm actually going to start with Miss Kelly Swann, all right? Ms. Swann, do you mind being first and introducing yourself and talking about all the great things you do to help businesses access capital?
Thank you again for having me again tonight. I had so much fun last night, so much positive feedback. So I started out in corporate America. I started out as a leasing consultant. I pretty much was raised there. I worked my way from a leasing consultant to the vice president of operations for a large development and affordable housing firm in DC. We pretty much built a lot of the luxury affordable housing buildings that are in DC. From there, and I was pretty much in corporate America about 17 years before I decided to branch off and do my own thing. From there, I decided to start a tag and title business. I was the youngest African-American woman to own a tag and title business in the state of Maryland. And I'm also a real estate investor. I invest in properties out of the country for the most part, Dominican Republic, Puerto Rico is here, but I have pretty much properties in a lot of different areas. I open those up as recovery homes for women. And most recently I have become a consultant, and basically I've been teaching people on everything that I know, from real estate investments to business credit to MBE certifications, pretty much everything. So that's me in a nutshell.
All right. Thank you, Ms. Swann. Jan, do you mind introducing yourself and telling the folks what you do in relation to helping businesses access capital?
Sure. So thank you so much for having me, Will. I too enjoyed yesterday's session, and I'm thankful to be with you guys this evening. So my name is Janice Walker-Emeogo. I am a former business banker with over 20 plus years of experience in the finance industry. I actually started out as an assistant bookkeeper at a boutique store in Bethesda, Maryland. And after that, I went into banking. I served as a personal banker, bank manager, business performance leader, and ended my banking career as a business banker. I currently work at the Maryland Department of Labor in the Office of Small Business Regulatory Assistance. I am the Small Business State Outreach Director. And so as an outreach director, I connect business owners in the state to resources and programs to start, manage, or grow their business. I've assisted clients that have $100 in their bank account to most recently a $35 million company. So that is a wide range. The top 3 inquiries that I get in my office are networking, how to do business with the state of Maryland, access to capital, MBE certification, you name it. As long as it is a small business inquiry, I can provide assistance to you as a business owner in our state. In addition to that, I serve as your business advocate. So if you have any questions or concerns, or you need to reach out to a different state agency and you're not getting a response, please feel free to reach out to our office. It's not that they don't want to communicate with you, it's just they're probably inundated. And so our office serve as your point of contact for such inquiries. I appreciate the opportunity to serve the small business community here in Maryland, and thank you for the opportunity to be here, Will.
Thank you, Jan. Let me tell you, you know how much I love working with small businesses, and there's very few people who I'd say go as hard as I do. Jan is one of those people, if not harder. Jim also one of those people. Not only is he, with Jim, before he was with M&T, he ran the Small Business Resource Center for the city of Baltimore. I mean, so those two have always been great partners for me, and I highly recommend reaching out to them. They are amazing. Okay. So next, thank you, Jan. Next, Kaetlyn, do you mind introducing yourself and talk about how you help businesses access capital?
Sure, no mind at all. So hi, everyone. My name's Kaetlyn. I run the KIVA Baltimore program out of a local nonprofit called Baltimore Core. We partnered with KIVA, which is an international nonprofit that supports crowdfunding and uses that platform and the opportunity to use human capital as a way to find financial capital. So we offer interest-free loans up to, which is really cool for the bigger businesses, $15,000 now. We expanded with the pandemic to be able to support more businesses that really could use this type of capital. But we work with you to do a lot. We work with you to be able to go through the crowdfunding process. It can be really new for a lot of folks. And I have been working on this program for over 2 years at this point. I was actually hired to design and relaunch this program after it had been quiet for a few years here in Baltimore. So I worked with over 40 entrepreneurs in the past 2 years. And supported them through every step, whether it's figuring out how you're going to actually tell your story, right? That's a huge part about our crowdfunding. How do you share yourself and be vulnerable with your business on a global scale? Because that's really cool about KIVA is they've been building this community of lenders, $25 or more at a time amongst people for over 15 years at this point. We just celebrated our 15th year anniversary in October, so it's very exciting. And the platform has 1.7 million people on there. So when we get you ready for this process, we want to make sure that we're putting you through with all the right resources. We're connecting you to the right networks and people in the city. We're building you a good marketing plan, a good strategy to be able to reach out to folks and really get your lenders. And then we're also setting you up for other opportunities for capital. I think KIVA is a really great way to be able to stack capital, especially for businesses within this stage. And who couldn't use an interest-free loan alongside some other capital option, even though we only go up to $15,000. So yeah, I get the honor and pleasure to work with every entrepreneur that comes to our program. I see at least one person in this group tonight, so I'm really excited about that. And yeah, it's a great experience and a totally different way to leverage your business. So I hope y'all are excited about that.
Well, I'm excited. Thank you, Kaetlyn. I learned a whole lot last night. From the first time I met you, you have always had that same level of energy. From that very first time I met you at that panel for Made in Baltimore, and you've been very consistent in your desire to help people as well. So thank you for being out here with me and trying to get folks connected to what they need to grow. Thank you for that. And also a great partner to the chamber. Fantastic partner to the chamber. So thank you. All right. So let's go with Jim Peterson, sir. Mr. Peterson, do you mind taking that question?
Yeah, sure. So as Will told you, I'm a former business owner, actually serial entrepreneur. I've had quite a few businesses, still have several. Everything from real estate to furniture to manufacturing. Manufacturing is my thing. One of the things Will asked us to share with you is our specialty. Manufacturing is my specialty. I had a manufacturing plant over on Russell Street for a number of years, 15 years. After selling that, I went to work for the mayor's office at the Small Business Resource Center. While doing all of that, I was always a SCORE volunteer, so I've always been in these streets helping people because somebody helped me when I was getting started. So I've always felt the need to give back. So I volunteer with a number of different organizations, always have, continue to. And now I'm with M&T Bank, and I'm fortunate to be here because M&T has so many tools, and every one of you would be a candidate for an M&T relationship, because we're looking for business owners, we're looking for people who are willing to grow, and that's why I'm here. I came to M&T because they specialize in relationship banking. My title is relationship banker, and that's what I do. I'm not a financial whiz. I'm not an accounting major. You know, that's not my specialty. My specialty is relating to people like yourself and identifying those with potential, right? I'm going to get that information from you. We're going to have a conversation. We're going to spend some time together, and I'm going to know if you're going to be successful or not. And the first step for me is to see folks like yourself investing in yourself by taking courses like this, right? So that's the first step. So what I do mainly is I connect people. All right, we have all the tools that's going to help you grow your business within the bank, and you know it's very similar to what other banks will do, other than the fact that again we build on relationships. But in addition to that, what my specialty is being able to connect you to folks who can help you grow. All right, again, I'm not that smart, but I know a lot of people who are very smart, like Will and McKeever and Kaetlyn and the ladies that are on this panel. Right, so I can connect you to people that's going to help you grow. I know a lot of other business owners. One of the things I recommend that folks like yourself do is talk to people who have been down this road already. Right, I call them old heads. You know, find an old head and say, hey, listen, you know, I'm doing what you've already done. Tell me what to avoid. What you want to get from them mostly is what not to do. Right, a lot of people can tell you what you should be doing. You know, there are a lot of textbooks that can tell you what you should be doing. You can Google what you should be doing. But these folks have made those mistakes, those serious, drastic, you know, life-changing mistakes that you want to avoid. And they can share with you their insights on how to avoid them. And I can connect you to a lot of folks like that.
Thank you, Jim. And now, Mr. McKeever Conwell, Mac, do you mind sharing how you help businesses get access to funding?
Yeah, so my name's McKeever Conwell. Everybody calls me Mac. We can go with Mac for the rest of the night. It's okay. I'm a software engineer turned serial entrepreneur turned investor. I am a venture capitalist style investor, right? So I do equity investments. So the way I help companies get access to capital is I invest in your company for a portion of equity to help you grow. I am currently the managing partner of Rare Breed Ventures, a pre-seed and seed venture firm based here in Baltimore. Before that, I worked for the Maryland Technology Development Corporation, or TEDCO, which is essentially the investment arm for the state of Maryland. It is the largest funder of early stage tech companies in the state. There, I did seed investments, and then I also led the creation of what is now known as the Builder Fund. The Builder Fund is the first and only state-backed pre-seed fund for women and minorities in the country. Essentially, we created a specialty fund for minority founders to help them get access to capital earlier than anybody else was willing to give, to help propel them forward. And so for me, what I do is I support typically technology, high growth companies, and funding for a portion of equity. And so we'll probably get into it more during this presentation, but venture capital is not right for every business. And for very specific reasons, right? Like people get upset sometimes when I tell them, you know, your business doesn't fit the venture capital model, but it's only because it's a model, right? Like there are specific types of companies that we look for in venture. And if your company doesn't fit that, that's perfectly fine. There are plenty of other ways to get funding for your business.
Thank you, Mac. And so I think I'm gonna start with you and work my way backwards, okay? So let's go right into it. Before someone comes, this is for the whole panel, okay? Before someone comes to see you to try and get some money, okay? What do they need to have with them? Okay.
So you don't need as much for me, as you do with some of the other people on this call, like, I'm not looking at your taxes. You know, I'm not looking at your credit score. That ain't me, right? What I'm looking at whatever it is that you're building, right? So what you need when you come see me is most likely you need a product that's in the market and you have figured out how you get customers. You don't need a lot of customers, but you need to know how you get your customers and been able to prove that in some shape or form, right? A lot of people say, well, you know, I read TechCrunch and I saw this entrepreneur, you know, this white guy from Stanford got $1 million right out of school. Why can't I be that? Well, fundamentally, as an entrepreneur, that person did not get funding for their business. That person got funding because of their network. So if you do not have their network, you cannot compare your business to them, right? That is the issue that a lot of entrepreneurs get into, where they want to compare themselves to other people when you don't know the backstory of how they got their funding. You don't know why they got that loan or why they got that investment. So don't get caught up in that. These, you know, this isn't real estate. You can't just look at the comps and be like, well, the house down the street went for this, so why can't I? It's not the same thing. So when you come see me, I'm literally only evaluating your business. The other thing is, hopefully you're building a business in a really big market. The reason being is, as a venture capitalist style investor, as a venture capitalist, I can only invest in companies that have the potential to have $1 billion outcome. What that means is, when I make an investment in a company, that means I believe that in 7 to 12 years, they can get to $100 million in revenue. Because $100 million in revenue, 10x that is $1 billion. That's $1 billion valuation. That is literally the only company I can invest in. So any company I look to invest in has to be on that trajectory and has to want to be on that trajectory. If that is not what you want to do, I'm not the person for you. This is not the money you want. Because the moment you take my money, we are now on this treadmill of going to $1 billion as fast as possible. Because I give you my money to blow. I don't know if everybody else on this call does that. When you get money from me, it's to set it on fire. And once it's done setting my money on fire, you need to go get more money from somebody else and do it again. And I'll be there with you every step of the way to help you make that happen. Because, you know, we're trying to burn money to make more money. That's how this works. But that's why it's a very specialized form of investment, very specialized form of money. So when you come see me, make sure you got a product. Make sure you got something. Now, don't come to me with something on the back of a napkin. That ain't going to work. Show me that you got to the point where you got something people can use. Let me know that you know how you find people to get them onto your platform and that you have a way to make money. The days of Facebook are like, I'm going to get as many customers as I can and then we'll figure out how to make money later. That don't work anymore. We don't do that no more. Show me you know where stuff is going to come from, and then make sure you're operating in a large enough market. Very often we see minority founders say, yeah, I'm building this and I'm building it specifically for the Black community in Baltimore. Well, that's great. I need something bigger than that, right? Like, tell me as big as numbers possible. Now, you can have a mission internally where helping, you know, Black people in Baltimore is the mission you have internally in your business, and that's cool. That don't mean that's got to be the whole business, though, right? Because if that's the case, like, I can't work with you.
Thank you, Mac. Very good. All right, now let's go to Jim. Jim at M&T Bank. Someone's coming to see you to get some money. What are you going to expect them to have? And also not just the tangibles, paperwork, but the intangibles. What are you looking for?
All right. So again, we're a bank. So we need all the things that banks need. We need 3 years taxes, personal and business. I'm going to need a balance sheet. I'm going to need P&Ls. But if you got any collateral, I'm going to need all the information surrounding your collaterals. I need you to be current with the state. All right. First thing we look for is, are you in good standing? A lot of people miss that. That's a small thing, right? So small that a lot of people miss it. And sometimes we get 2 or 3 steps down the road and then, you know, I'll check or somebody in the branch will check, or one of my you know, people I work with within the bank will check and say, hey, this business isn't in good standing, right? Because a lot of people miss that. You get wrapped up in running your business and you forget to pay that $300 fee. And if you have a larger business, you know, you're going to pay more than that because that's your property tax to the state. but just the minimum fee is $300, and a lot of people forget about that, come April, and but that's important. I can't work with you if you're not in good standing. Your business needs to be in good standing, and right now it's pretty critical because I've run into a couple of people who weren't in good standing, and getting things through the state right now is really difficult, and they're slow typically, and to get these things moving. And a lot of people are working at home right now. Things are moving a little slower than they usually do. So it's holding a lot of people up. So you want to just check that and make sure that you're in good standing before you come see a banker if you're looking for lending. But you got to have all those other things that any other bank would need. But with me, I want to see a business plan. And again, we're going to have some conversations. We're going to go back and forth, chop it up for a little bit, because I want to know who you are. I want to know who you really are, because I'm putting my name, my reputation on the line with every deal that I put forward to an underwriter, right? And I need to understand you and your business. If you have any partners, I need to understand them, and I need to know that you know what you're doing, right? So I need that business plan with those cash flow projections, and a lot of bankers might not ask.
Cash flow? Did you say cash flow?
I said cash flow. All right. I want to see 3 to 5 years cash flow. That makes sense. All right. I don't want a cookie cutter business plan. I've seen all kinds of business plans. Don't come to me with a 60-page business plan because I'm not going to read it. Right. What I want is a good, sound executive summary that's going to make me want to read the rest. It's going to make me want to turn the page. That executive summary should be like the foreword to a book. You're writing a book about your business. And you need a great foreword in order to get me to finish reading your book, right? So give me a good executive summary that's going to entice me to want to read the rest. So I want to see a good business plan with great cash flow projections, and it's got to make sense. Don't come to me and say, well, I've been cooking dinner for my family for 20 years and they love my food, so I'm going to open up a restaurant. All right, that's not going to work. We need more than that, right? So again, come to me with all the financials that everybody else wants, but then come to me with a good sound business plan.
Jim, what kind of mindset do people have to have when they come to you? What are you looking for?
I'm looking for growth, right? I'm not looking for people, not as much as Mac. You don't have to be wanting to make $1 billion. Now, I do some things outside of the bank that Mac and I have the same mindset, right? But within the bank, when you come to M&T, we're looking for people with a growth mindset, right? You may be making $50,000 this year, but I want to see somebody who wants to make $100,000 the following year, and somebody who wants to make $200,000 the next year. And we can help you do that. Again, we have some great tools and some great experience within M&T Bank. We have some folks who can help you get there. And when you get to becoming a high net worth individual, we certainly have some investment bankers within the bank. We own Wilmington Trust, and with that, we're just going to keep helping you grow, right? So we have all the tools you need, but you got to want to grow, and that's what we're going to be looking for.
And one more question, Jim. I'm going to go on to the next person. We have a lot of folks here who do government contracting, or they're starting to do more government contracting, and believe me, I know. Oh my gosh, the delay in getting paid. If a customer comes to you for that, I'm not a customer, a potential customer comes to you and say, hey, Mr. Peterson, I'm a government contractor. I need some money so that I can cover payroll till I get paid by the government. What would you say to that person?
Yeah, what I'm going to say to them is that I can refer you to somebody, right? M&T Bank is a cash flow lender. I need to see that you get enough cash flow to pay your bills and still pay this loan back that I'm going to give you, right? So we don't lend on projections and hope and contracts. We lend on cash flow. We need to see that you can afford to pay this back. But I'm going to refer you to some folks. I got some folks for you who will be happy to lend you on contracts.
Thank you, Jim. All right, so let's go to Kaetlyn. Kaetlyn, all right. So if someone's coming to see you, what do they need to have, like actual paperwork and all that? But then also, what kind of mindset do they need to have in order to be able to work with you?
Sure. Jim, you set me up super well.
That's what I do.
Yeah, the people that get referred from Jim to places like me. So yeah, we are very inclusive. KIVA is all about redefining creditworthiness. We're looking at more than just your financials. We understand that people have, different backgrounds and experiences that maybe don't make them creditworthy to a traditional bank. But by having individual investors who are really looking at your story and what you're looking to do in terms of like they're investing in you as a person more than your business, I would say. So to get a little into the nitty gritty in terms of like really specific documents we're looking for. Well, the first thing is basic finances. I want to point that out because it's really important. We're just going to ask the absolute basics. And money in, money out. And what we're doing for that is to figure out on both the personal end and on the business end what your debt to income ratio is, because that's going to have one of the biggest impacts on where you fall into our loan qualifications. The way KIVA works is we have different loan ranges that you can fall into, anywhere between $1,000 to $15,000. So depending on the information in your application, you'll be pre-qualified or estimated to fall within a specific range. And so through the information, the better your finances are, the better chances you have at qualifying for a higher amount, and hopefully the amount you're actually looking for. I will say that if you can't qualify for that much, KIVA is still an option and open to offering loans typically, just at a lower end. So if you're really looking to, again, stack this capital or just, use a portion of this, that's possible. And then sometimes we have people who come back for second-time loans, but I'll save that for later. Another document we're really going to be looking for, though, is your business proof. We're not looking for, super extensive, 10 different versions of this. We're looking for one government issued document or some sort of legal document that shows your name, the business name, and the business address all together on one sheet. So as long as you have something like that, like your tax returns or your articles of incorporation, depending on if you're a sole proprietor, we'll take certain documents over others. But those are going to be one of the key factors to even just saying, yes, we're going to offer you a loan, or no, we're not even affecting the amount. And then something that does, change throughout the process, but a document that's super important that will really impact where you qualify is if you have a business bank account. That is another basic tenet. We want to make sure that you have your personal finances separate from your business finances. And I heard that earlier before we started talking, so I'm glad that was pointed out. In order to qualify for more than $3,000 with KIVA, you actually have to prove that you have that business bank account. Something non-traditional about the crowdfunding aspect of it is that you'll be on a campaign page and you'll have your business story, your personal story. You're going to have a photo of you bright and shining, happy on the front page, telling your business story. And so that's kind of the more abstract part of it. How do you craft a narrative that is going to really intrigue people from all around the world, whether it's your next door neighbor or someone all the way across the ocean? So that's going to be really important to approaching the KIVA process, knowing your story. And then the last part that's, probably the key to all of this is making sure you have a strong community. You need to have a good network of folks that you can reach out to and say, I'm putting my business through this process. I'm being very vulnerable, and this is how I'm going to use the funds. I'm going to use this opportunity to really create a new stream of revenue for my business, or I need to buy a vehicle that's going to help me better transport my goods. There's so many different ways in which KIVA uses or offers loans, and people use the loans, that as long as you make a compelling enough story and know how to reach the people that you're telling that story to, then you'll be in a really great position. But it is a lot of hard work. It's difficult sometimes for folks to understand that you have to go out and ask folks for money and to be able to explain your story to so many different folks, right? That's not something you usually have to do for when you only have one investor. So I think that's a really important key part of it, but one of the most beautiful parts about our program is that we're really truly about building community and building your network and building your business through that.
Thank you, Kaetlyn. So I'm going to ask you, all of you, a few more. I'm going to go to Jan and then I'm going to go to Kelly in a second. I'm going to ask you all just maybe a couple more questions based, these kind of prepared questions. But then I want to make sure that our scholars get a chance to ask you questions. So scholars, if you could, start to type in your questions in the chat box, okay? And of course, for our panelists, I see some of you already answering them as we go. But if you have questions, please feel free to type them in, and we'll start to take them in just a little bit after these next few questions. So, Jan, if you could talk about how you help business. Before a business comes to you, what kind of things should they have in order for you to really be able to help them?
So in my office, it's a little bit different because we're not a bank. We are a connector / resource unit. And so clients can call me without being prepared. But for me, that's actually a good thing because I tend to be the person that gets them prepared to have a conversation with a banker. And so if you're calling me on the phone and you're like, Jan, I need access to capital, that's fine. I'm going to start peppering you with questions because I have a finance background. I want to know your, last 3 years revenue. And I need you to tell me that on the phone. And if you can't, then I need you to be able to tell me that within the next 15 to 20 minutes. It should be at your fingertips. You should have that information as a business owner, right? Or easy access to it. Then I'm going to ask you questions about expenses in your business and your net profit. I'm going to ask you the number of employees. I'm going to ask you questions that you should know right off the bat as a business owner. And what I'm doing with that information is I'm building a profile for you. Because once I collect that information, I am then going to reach out to my resource partners in the banking finance industry, of course, with your permission to share that information. And I'm going to say, hey, I had a conversation with the client and here's the information that I know you as a bank, this is what you're looking for in terms of information to determine, is this client, someone that I want to engage with? And if my banker says yes, then the next step for me is to do an e-intro, right? I connect you guys online, but just know in advance that the banker has the information, your revenues, your expenses, your number of employees, and just a summary of your business along with different links for them to check you out before they have a conversation. If you can't provide that information to me in our conversation, in our initial conversation, I do not do an introduction. You have to come in a separate, conference call or in a separate email, provide me with that information, and then I will make the connection to the banker. Because one of the things that people will know early on with me is that I do not waste time. It is very precious. I do not waste your time as a business owner, and I do not waste time for my resource partners because they too are busy. And so being prepared during that conversation or even after, because sometimes things happen, but I look for follow-up, follow-through, disciplined individuals and people that are going to respond quickly. So that's how I work with clients. And I've got to tell you, my resource partners, when I send emails out to them to say, hey, I have a client, this is their profile, or I'm calling them on the phone, within the next 24 hours, that client will get a response from my partners and get the ball rolling.
People know Jan does not play. So, and I tell you, she has helped me out so many times, supported me tremendously. So please, when you're ready, please reach out to Jan. She's great. Okay. She'll take great care of you. Thank you, Jan.
Thank you.
So Miss Kelly Swann, if you could, I really want to actually start to talk about business credit. Okay. Because that's something that a lot of people don't really know about. I learned a whole lot last night. Okay. So if you could talk about, let's do it like this. The normal, like a business would come to you, okay? Mm-hmm. And they're like, hey, maybe I tried to work with Jim and, my credit score was low, or I'm in a situation where I can't get traditional funding. All right. Can you help me? And if you can kind of just take us through that whole process of like what you would do, how you would help them, and then even the benefits of using business credit. So do you mind talking about that?
Absolutely. So what my team and I do is we help small businesses, we help larger corporations establish and leverage business credit. As Will brought out, a lot of people don't really understand business credit. They shy away from it because they think that either their business is too small, they think that they don't qualify because their business is too new, they think that they already have established business credit. So I don't need really anything to get you started. Just basically knowing your business, what your business entity is, and I can pretty much help you pull your payback score to see where you are. The benefit is that your business credit has absolutely nothing to do with your personal credit. So if your personal credit score is, low, it has nothing to do with your business credit. Business credit is completely separate. It should always be completely separate. And I always tell people, I said this last night, I said it to a client today, you should always think of your company as a multi-million-dollar company. When you apply for business credit through, wherever you're going to apply for it through, and I'll give you some tips to the trade, you should not be giving out your social security number. You're always going to use your EIN number. You're always going to use your Dun & Bradstreet information, because that is how you're actually building your personal credit. You can build it with as little as $50, and it takes about 30 days to get that done. And of course, with business credit, you're going to get a lot more than you would with personal credit. As a matter of fact, it's 10 to 100 times more than what you're going to get with personal credit. And it's a very simple process. It's just really following the tiers to it, because you can't start off with a Home Depot credit card. You have to kind of start smaller and build from there. And once you get through the first tier, you have to go to the second tier and the third tier. So within 60 days, if you do everything correctly and everything is credible, you should be able to really have a significant amount of trade lines, at least 3. Something like that looks really good. Your paydex score should be about 75 or higher. Paydex scores are 0 to 100. So anywhere between 70 to 100, you are, you're amazing. And creditors, different financial institutions, American Express, most of my clients are buying big cars. I just posted one of my clients purchased a $115,000 car using her business credit that we helped her build in about 45 days. A lot of my clients are buying properties for investments. They are using it for just to stay afloat, because they weren't able to get the PPP loans or the EIDL loans. EID, did I say that right? EID. They weren't able to get any of those loans from the government. So they were actually able to leverage their business credit and, build that business credit, leverage it, and, use that for loans and different products. So that's what we do.
Okay. So Jim, all right. So Kelly Swann with business credit, Jim Peterson, is it safe to say that normally the loans that you do, and tell me if I'm wrong, are they usually backed like a personal guarantee? If I would come to you for a loan, you would look at like my personal credit score. Is that correct?
Yeah, that's a part of it. It's always a part of it, because you are the business in most cases. And if you're talking about larger entities, companies, that's the difference between a business and a company. A company can run by itself without you, right? But a lot of businesses require the managing member, in most cases it's an LLC, requires that managing member to be a part of that business in order for it to run. So you and the business are pretty much one and the same. Most of them have pass-through income. I'm going to want to see, because that income passes through, I need to see your business taxes as well as your personal taxes. So I'm going to need to see both.
Okay. Now, so let's say if I work with Kelly, she got all my business credit straight, and I've got a certain amount of money through her, or access to a certain amount of money through her, and then I come see you. By having those kind of business business credit, does that in any way hurt or help my situation if I come to see you for a more traditional loan?
Yeah, absolutely, it helps. All right, because we're going to check all that. We don't want to see any negativity on either side, the business or personal. So it will help, but we're still going to take into account your personal tax, or your personal credit score as well, because you're managing the funds of the business. Again, if you had a company that ran by itself, like, not to use myself as an example, but I have a company that up in Delaware that pretty much runs by itself. So if that company were going to get a loan, it wouldn't have anything to do with me, right? So if you have a company that's running by itself, your personal taxes are not that important. Your personal credit score is not that important. But if you're critical to the operation of that business, then we need to make sure that both are in good shape.
Okay, thanks, Jim. Now I'm gonna go to Kaetlyn, who has another form of ways of getting you access to capital. Kaetlyn, could you get into a little more detail about exactly how it works working with you and how you work with KIVA?
Sure. So I'm essentially your local guide. I am here to walk with you through every single step of the process. And honestly, it's because you should have a really close relationship and build a lot of trust with the people who are lending to you. I think to have that strong relationship and be able to be really open about your situation is super important. So I try and make that connection with every single entrepreneur I work with. We start all the way from square one. If you come in and you're just like, I'm starting a business and I don't know where to get registered, we're able to find those people, those resources to really get you going. We love startup businesses because we know that those folks can't really walk into a bank right away and say, yes, I can get this loan. So we really try and make sure that you have all those resources and the right networks in place. If you're a maker and you're not part of Made in Baltimore's network, we're going to get you connected there. If you're a business owner and you're not in the chamber, we're going to get you in there. If you're looking to grow your communities, this is a really good place to start doing that. And we have so many different connections to folks. We don't do as much of the technical assistance provision. We do support you with a little bit of that, but we'll usually refer you out to someone, but they're always close partners of ours to make sure that you can get that extra level of support. We also even have something called trustees. So when we connect you with our KIVA Baltimore trustees, those folks can actually make endorsements on your application. And so what an endorsement does is it makes your character reference even stronger for KIVA, and it builds an even more compelling reason behind why they should positively offer you a loan, why they should give you as much as you're asking for. So we really set you up to make sure that you have all of those key pieces in place before you even go through the actual application process. And then once you get to that stage, you're like, okay, yes, I've got my people lined up. I know exactly how I'm going to use the funding, because that's a really big part of it. A lot of folks just see dollar signs and they're like, this is going to save my business. And I'm like, what does that mean, though? How are you going to prove to folks that this is going to change your business in some way? So really making sure that you have that stuff detailed out, and then we work with you to write out your personal story, your business story, how you're going to use that loan to make it a compelling argument again online in front of all of these global folks who are going to be coming across your campaign. And once you get through the application stage, it comes directly to me first. So I get the chance to review it, make sure that everything's in tip-top shape before we actually send it off to KIVA at the national level, who's headquartered in California. And so another part of my role is to be an advocate for you, to be able to offer what is the picture, what is going on in our communities in Baltimore. I get a lot of leeway in my work. I get to know all the special ingredients in the sauce, and KIVA allows me to share it with you all. So it's a really cool opportunity for me to really stand up for you and your business and be able to say, this person deserves this funding for these reasons, alongside everything else they've already included in their application. So in that review process, KIVA is going to be, chugging away, doing the underwriting. We're going to be working together, communicating to build your strategy. Who are you going to be reaching out to? Friends and family is usually the first place that people go for crowdfunding because it's their closest community. KIVA, again, is only a $25 investment at the minimum. So it's usually not a lot for folks to, get involved in that, and eventually they will get repaid. So as long as you can tell that part of the story too, saying you're making this investment in me now over the term of my loan, I will be paying you back directly. KIVA doesn't take any part of it. We're a nonprofit, so I want to make that super clear. All the money that's given to you goes directly to you, and all the money that's repaid by you goes directly back to your lenders. So we want to make sure that your community understands that. How do your friends and family react to that? Think a little bit broader beyond that. If you need to reach 20, 25 people to just get through the first stage of fundraising before you get in front of our global community, then how are you going to reach those folks? Are you going to text them? Do they respond best to an email maybe? Are you going and, well, I guess today we're not really going up and giving flyers out, but, hosting different virtual sessions, getting creative on how you're going to reach out to folks through the process, and what that core message and story is going to be to it. KIVA's campaign page will be available for folks to, visit and read over, but if they hear it from you, their trusted, friend, leader, fan, then they're definitely it's going to go a lot further in the process. So we work with you to build that strategy. We give you a ton of tools. We even promote your business. We use our own platforms. We put folks through our pages and we say, hey, we invested in them. We gave all this time and energy, so should you. And then, through the process, monitoring your campaign, making sure that you're hitting your milestones and all the goals that'll eventually, hopefully, lead you to success and be able to actually get that funding. And then through repayment, right? I want to talk about the pandemic for just a second, because it's so important that we were able to offer interest-free loans during this time. So many folks already had KIVA loans, couldn't repay their loans, right? Everyone was running into those issues. We unfortunately couldn't change our repayment terms, but because people didn't have to worry about interest compounding every single day, and they didn't have to worry about, the bank calling them saying, hey, where's our money? All they had to do was communicate with the likely hundreds of people who supported them. And then the community had been super encouraging this whole time. They're all looking to find more ways to invest and find more ways to support these businesses. So it's a really cool process in terms of like how flexible it is. And then, once you repay your loan, you can come back for a second one. You can pre-qualify actually if you responsibly pay back your loan on time, you communicate with us if there's any issues, that kind of stuff. You can come back and pre-qualify for double right off the bat. And then hopefully your finances have improved at that point, so you can probably qualify for even more. So there's a lot of ways that KIVA works, and it's really individualized. So that's why I work so closely with each person to make sure it works for you and your business in this specific situation.
Thank you, Kaetlyn. So Mac, I have a question for you, okay? So let's say you have let's say someone in here is thinking about building this $1 billion business, okay? What would you say are maybe the first 3 things you'd recommend that they start to think about as far as maybe creating a business that can scale to that kind of size? What kind of advice would you give for someone who's really at that beginning stages?
First thing I would tell you to do, first thing I would tell you to do is go and validate that what you want to build is something people want or are willing to pay for. Go do what we call customer discovery, right? Go talk to your potential customers and act as a researcher. Don't go to tell them about your business. Don't go tell them about your plan. Go to learn about what their problems and their pain points are. Because you may find out that the problem you're trying to solve for isn't the real pain. It might be something else. So you want to figure that out first. Do that. And once you figured out what the pain is and what you should be solving, what you're solving for, then build the simplest version of whatever your product could be to validate that what you're building is the thing that people are going to use to solve this problem, right? Don't go find a design or a development firm and give them 20 grand to build an app that you don't know anybody wants to use, right? Go use, a PowerPoint, or there's a bunch of tools now like Canva, and create a clickable mockup and see if people will click through and just go through the basics of doing what you want them to do or what you expect them to do, right? When I was doing this with my first company, one of the best pieces of advice I got was to do something like that and then go to a Starbucks. And then when you saw somebody get in line, ask them hey, if I pay for your coffee, will you check out my business? I can't tell you how many people I got just to look at my business and kind of go through my demo just for buying a cup of coffee. Now, Starbucks is some expensive coffee. You can find some cheaper coffee spots around town, right? But it was just a way to get some initial user feedback. Another thing I've seen people do is go on Craigslist and be offer people a $10 gift card or $20 gift card to check out their product. You'd be surprised how many people just reach out to you for a $20 Amazon gift card, with a pizza and some Coke, right? You can get some people to try your product out and make sure that it's going to work and it does what it wants to do. And then once you do that, then start to get it out to the public, right? And once you get out to the public, the last piece is, as innovative and unique as you want to be in your product, be as innovative and creative and unique in your customer acquisition. Because at the end of the day, customer acquisition is what's going to get you paid, either in revenue or in funding from somebody like myself. But growth is the name of the game. So try to be as creative and unique in your customer acquisition, because that's what's going to get you there. Don't just show up and be look, Mac, I got the product. People say this is what they want. Give me the money. I'm well, how many people you got using it? I got 4. Well, that might not be enough. Now, if you tell me you sell them at the 4 businesses and each business is paying you 50 grand a month to use it, okay, we can talk. That's a whole different thing. But if you're telling me you got 4 people using it, each paying 50 cents a month, probably need to do some more than just that, right? So really focus in on customer acquisition. So, you know, do some customer discovery and make sure what you're building is what people want. Build the simplest, cheapest version of your product to kind of validate your initial assumptions of what it is that you're trying to build, and then double down on customer acquisition, because that's what's going to get you paid in here.
Excellent. Thank you, Mac. Okay, so what I'm going to do now is we're going to take some questions from the group, all right, for the next few minutes. So, scholars, hopefully you guys have some questions. I see some of you started to type things into the chat. So if you have more questions, this is your time to type them in. All right, so we asked for credit for contact information. You guys have shared that. Thank you for that. Okay, let's see. All right, so this came from Falcon Accounting. So question is, do you finance startups? What do you look for before financing them? Does anyone want to take that? This is an accounting firm, does finance?
Yeah, I'll take that. You know, as a bank, you know, startups are tough. Any financing for any financing for a startup is going to be tough. So it's going to weigh heavily. Again, if you come to the bank looking for financing, it's pretty much a personal loan. You're going to need to be very strong because you don't have a business yet. You don't have a company, you don't have a business. It's just you at this point and your idea. So you have to be able to support that loan with your day job or with the side gig that you have, or if you have a little bit of business, you know, and it's enough to pay back the loan, pay your personal expenses and the loan, then we can talk. But it's going to be really difficult for a startup at a traditional bank to get lending.
Kaetlyn?
I feel like I kind of went through this a little bit, but we love startups. Like I said, we understand that's the folks who can't really walk into the bank. So we're going to look at the same kind of stuff, though, that I just mentioned. You're going to be measured up against the same standards. Very open.
Okay. All right, good. Very good. Jan, do you have anything you want to add?
So yeah, so startups are less than 2 years, right? So if you've been in business at least 1 year, you know, there's some institutions that may take a look at you. But again, and I know Will is going to say, what did you say? They are going to look at your business plan with some very, very strong cash flow projections. I can't help it. It's true, though. It's true what he has told you. I know that in the past, I was able to help a very specialized mechanic shop that was in business less than 2 years, but he had 10 plus years of experience in the industry working for Nissan and some big auto shops. And so we were able to look at his business plan. He got a CPA to do some very strong projections, and I was able to get a deal through SBA and got him approved for a line mixed with a small loan for his business. But what won the deal was the number of years, his experience in the industry, the fact that he was certified by Nissan, and I believe he also worked at Toyota, and the fact that he had at least 1 year good tax returns and very strong projections in his business plan.
Excellent. So if someone has a startup, they should contact you. You could probably see what you could do for them.
Yes.
Okay. So the next question, this comes from Bandita. She said she has a very successful business already for 5 to 10 years, but she's thinking about starting something new. Is there a way that she can leverage that in some kind of way to kind of help her start this new business and also getting kind of resources or funding? I'll start with you, Jan, and then anyone else who wants to jump in and take that.
So again, as a former banker, some institutions, and that's why you have to have a relationship with your banker and pose these questions, because some institutions will look at a successful business that's been operating for X number of years. And yes, this business owner is trying to, start another business. One, do they have the experience in the industry, right? And some institutions may say, okay, because your first business is so successful, we may use that business along with this financing as sort of like the parent company to support this new one. And there's a lot of other complicated pieces that go along with it, but is it possible? Yes, depending on the institution and their credit policy.
Very good. And just real quick before I go on to Jan, do you know about like Miss BIDFA and like CDFIs, like how they might work?
So CDFIs, yes, Miss BIDFA is at Commerce. So I would refer them over to their Commerce rep in the county. So the Maryland Department of Commerce has senior business development representatives in every single county they cover every single county in Maryland. And so if clients have questions about that particular loan product, I'll be more than happy to connect you with your Commerce rep, and they can kind of guide you along and provide information on that particular program. But CDFIs, yes, we actually just hosted a CDFI webinar, 3-part webinar with the Small Business Development Center. And so I have tons of contacts within that area. Of course, Baltimore Community Lending is a CDFI organization. There's an online organization called Lendistry. And so if you need information or you have questions about how CDFIs operate, they're a little bit, in terms of their credit policy, they're different than an institution in terms of documentation. They're still going to require the same thing: business tax returns, personal financial statement. Some CDFIs offer technical assistance if your business plan is not fully developed or it needs some tweaking. So I'll be more than happy to have one-on-one conversations with clients and see which CDFI organization would be a better fit.
Jim has something he wants to add. Jim?
Yes, I can speak to both of those. In fact, Ms. BIDFA is the organization that helped me move my business from Pennsylvania down to Maryland. So there was a partnership between Ms. BIDFA and BDC, Baltimore Development Corporation, who my partner and I to move from Pennsylvania down to Baltimore. Again, we needed to be near a port. We were a manufacturer. Again, we needed to be near a port, near the Philadelphia port. We were looking to grow. We were looking for a new building. And I got to know Paul Taylor. And Paul Taylor was at BDC at the time, working with Stanley Tucker and Randy Croxton over at MMG, who manages the Ms. BIDFA fund. And they put together a package that allowed us to move down here to Baltimore. So that was a great, organization. The funds through Ms. BIDFA is along with the other things that the state offers. I mean, we got financing, we got great tax breaks. We were at the time where we moved to on Russell Street was an empowerment zone. We didn't pay employee tax for 10 years, right? So we hired a bunch of folks and didn't have to pay any in a city employee wage tax. So we got some great benefits through the state and what they offer. And as far as CDFIs get their funds from banks, right? We contribute to the fund that BCL manages, right? So while CDFIs are your community lender, you need to know where those funds come from. Those funds come from banks, right? So banks, not just M&T, but your traditional banks are the ones who contribute to those funds that the CDFIs distribute, right? Because they're typically smaller funds that are not cost effective for a bank to do, but it's cost effective for a smaller entity like a CDFI to distribute and manage. So the banks will contribute to those funds, and then the CDFIs will distribute those funds.
And may I clarify, because I know we use a lot of acronyms, CDFIs are Certified Development Financial Institutions, just in case folks are wondering, what is a CDFI?
Right.
And also Latino Economic Development, they're a CDFI as well. And you don't have to be Latina to work with them. I know, actually, I've sent some clients to them, and they were able to get funding that way. We wrote the business plans for them. So, there's a lot of, so for all of you listening, there are so many, one thing I love about Baltimore in this area is there's so many resources. Like I go and travel other places, like they don't have, great SBA, great small business development centers. They don't have, great state minority business development offices And, all these different programs for women and small businesses, they don't have like Jim Peterson's or Janice Walker's or Kaetlyn's. They don't, Max, I've gone other places, they don't have this kind of stuff. So it's really, really great here. So anyone on this panel, please reach out to them after this for some, information on funding. Like, these are the top folks in the city who can tell you. So that's why they're here tonight, and I appreciate them very much. And of course, I'll ask them if they don't mind putting their contact info in if they haven't already. Looks like they have. All right. So next question. Can people build business credit score versus personal credit score? Kelly, you want to take that?
Yes, absolutely. Yes, your business credit score is completely separate from your personal credit score. It is basically based on the trade lines that you have on your business credit, and it is based on your ability how soon you actually pay it back. So if you pay it back 20 days or sooner, your payback score is going to go up higher. Payback scores, again, are from 0 to 100. So 70 is a great payback score. If you pay it back in 30 days or less, then your score is still going to be, really good. You have to have, several different trade lines. Like I said, 3 is good to start with. And they should be a mixture of several different things. They should be a vendor account, which is what you should start with. They should be a retail account, like a Home Depot type of thing. And then you should have a cash account, like an American Express or a loan. So you have to actually build up to that part. But yeah, it's completely separate.
And so, Kelly, if someone wanted to check their business credit score, what would you, like, they said, hey, how do I even check that? What would you say?
I would say go to smartbusinessreports.com/Experian. And the reason why I like their platform is because they not only give you your paydex score, they tell you what key factors are affecting your paydex score. They're telling you what companies are actually reporting to your business credit, because a lot of people don't know that 97% of vendor companies don't even report to your business credit. So a lot of people are getting all these different credit cards, they're getting all these different vendor accounts, and it's not helping their business credit whatsoever because it's not reporting to, Dun & Bradstreet or Experian or any of the other TransUnion credit accounts. So you have to know the 3% that are actually reporting. But yeah, they give you all that information. They don't tell you which companies are that you should have, but they tell you if you have that 3% that are actually reporting, they'll tell you what they're actually reporting. So you can always, look on there, and it gives you, a lot of good information.
And what was that website again?
I will put it in the chat as well. It's called Smart Business Reports with an S.com/Experian.
And if someone contacts you, you can walk them through all these things, right?
Absolutely. I can give them the 3% of the vendor accounts and the retail accounts and the cash accounts that actually do report to Dun & Bradstreet and Experian, so that they can build their credit, their business credit.
And you also teach classes on this, correct?
Yes.
Okay.
Yes.
I know you had, I'm not sure if your class already started, but I know you have like a 7-week class.
I have a 7-week class that started last Thursday. I will run them continuously every 7 weeks. I'll probably take a week break, so I'll start again in January of next year. But you can just get just the business credit course on my page. It's going to be a video, and I also do one-on-one trainings as well.
Excellent. So please reach out to Ms. Swann. She knows what she's talking about, and she can help you and bypass trial and error. All right, so we're going to go to got a few more questions, and then we're going to wrap up. And I appreciate everybody staying focused and asking questions, and of course our panel being so awesome to be here to answer them for us. All right, let's see. Next question from Dr. Thurston. If you have a business partner, should both partners have strong or good credit? Who wants to take that?
I could take that. So when you are in a partnership, it is very important that you check all of these things prior to signing the agreement, because anytime your partner owns more than 20% or more of your company, they're in it. They're on that loan application. There is absolutely no way that they're not going to be part of that credit decision. So they need to have good credit. If their credit is not where it needs to be, if it falls below the credit underwriting guideline of that institution, then that's going to be a decline to your loan. And so your partner, whoever you decide to partner up with and go into business with, you need to have that, what is your credit score conversation, debt to income ratio, those pieces are really important. And so to answer the question again, if your partner does not meet the credit score requirement for an application, that will negatively impact the loan decision.
Okay. Anyone else want to chime in on that? Is it any different for what you do?
I'll pop in real quick. So for us, right, we talked about how important that business proof document is. Whoever applies for the KIVA loan has to be listed on that documentation. So making sure that person's first and last name, the business name, and the business address are all connected on that document. And what we always suggest is whoever has the higher personal credit score or the better financials overall is the person that should apply, because they'll position you best for the most capital from KIVA. I want to point out, we don't even ask for business credit. We don't track it. We don't report it or anything like that. So we used to, it wasn't going well. So we decided to stop that process. So just, it's all based on personal credit. So for us, whoever has the better financial history will be better positioned likely for the loan. But it's still a two-person process. It can definitely be a two-person process. That actually might make the crowdfunding aspect of it a little easier to have an extra person on board.
All right, very good. All right, we've got two. Jim, did you want to say anything on that? No, you're good? Okay. All right, we got two more questions and then we're going to wrap up. And then I'll ask you all to just give any last parting words, like, best 3 steps to take to get access to capital to grow your business. So these last two questions. First, this is from Julie. She writes, is having a business credit card enough to build a business credit score, or is it essentially just a personal card with a business name slapped on it? For example, I have a Southwest Visa.
Yeah, Kelly can talk more about this, and I'm sure she will, but I just want to say that that's not the same. So I'll defer to Kelly.
Right. Piggybacking off of Jim, yes, it's not the same. A business credit card is something that is, established through your business credit. It's not secured by personal assets at all. It's not secured by your personal social security number. It's not a debit card. It is something that is built through your business. So it would be, a business American Express card. It would be a business, MasterCard. It would be a business, line of credit, but it wouldn't be just something like that. And you would definitely want to start with a vendor account, because if you try to go directly to get a card, you'll more likely be declined because you haven't built enough history or enough trade lines to go straight to getting a card. So you want to start with a vendor account. And I gave this information out last night, so I'm going to give it to you all as well. One vendor account that you can use to start with, which is very simple because a lot of people use it, is Vistaprint. We typically need a lot of business cards for our business. I don't know how much we would need it right now with the pandemic, but they offer other things. They offer so many different other things, T-shirts, cups, pens, all different type of things. But you have to spend at least $50. Because if you spend anything less than $50, it doesn't report to your business report at all. So you have to go on there and actually create a business account, get approved for a business account, purchase something for $50 or more. You will have to, of course, pay the shipping and handling. So let's just say $65. Once you receive it, pay it within 20 days. That will be your first trade line that you'll have to start building your credit score.
Excellent. Okay. Very good. And then our last question from the group, and then we'll wrap up. This is from Mr. Ferdinand. For the past 3 years, I've been bootstrapping my business. This year, I did get some funding from KIVA. Thanks, Kaetlyn. What is the best way to get a low interest loan to help me scale my business? Are loans under 4% interest for about $300,000 hard to find? How do banks, venture capitalists decide on interest? So there's a lot in that question. Who wants to take a stab at that?
Yeah, I guess I'll kick it off. And I did respond, yeah, so the rates are determined by the market, right? There's a daily rate, it changes every day. So a bank is going to look at the cost of funds plus the daily rate, and we're going to determine what your rate is based on your credit score, your collateral. You know, there's a lot of variables there. But right now is a great time to get a loan. If your credit's good and your cash flow is great, right now is a great time. The interest rates are lower than they've ever been. Cost of funds and interest rates are very low right now. So it's a really good time, if you can, to get a loan. So you can find a loan for $300,000 for 4%, you know, in that neighborhood. And it's rare. I mean, typically you'd be looking at 6.5 on a loan like that. But right now you can actually find, a commercial loan in the 4% neighborhood.
Yeah, the only thing I would add is from a venture capital standpoint, we don't do loans. You know, there isn't an interest rate. It's equity, right? So we give you money to purchase a portion of the business to become partners with you. So more, it's not so much you want to talk about interest, but like valuations. How do we value a business? And from an early stage standpoint, it's a lot more art than science. So, you know, for the loans and everything, they got calculations and all that. For what we do is nothing like that, right? It's more, how much money do you want to raise versus how much equity do I want to own? So if you want to raise $1 million, I want to own 20%. That means we want to get you to a $5 million valuation. So a $5 million valuation, I own $1 million of that. That's 20%. You get your money, I get my ownership. The way it kind of goes up and down at this stage has to do with leverage. How much leverage do you have as a business versus how much leverage do I have as an investor? Generally speaking, I typically have all the leverage. The times where you have more leverage is when you have more customers or you have a lot of investors who want to make an investment at that time. That's where you get the leverage to kind of raise your valuation up at the earliest stages. Then once you get later on a more established company, then it becomes more metrics based and more of a calculation. But the early stages, it's a lot more simpler than that.
Okay, very good. Anyone else have anything else they want to add on that? No? Okay, good. So first, before we wrap up, I want to just thank all of our panelists for being here and sharing their knowledge and experience. As always, thank you all so much. I owe you again. Once again, I owe you. I know I have a tab. So feel free to collect anytime. And so I'm just going to ask you guys, if you could, to just give some parting advice, okay? So for everyone here, they've been in business a while, they've been growing their companies, they're trying to really scale. You've told them what they need to do in order to have a better chance of accessing capital. So based on what you do, what would you, based on your experience, let's leave them with three tips, so 3 best next steps that they should take in order to be successful. Let's start ladies first. Kaetlyn, do you mind being first and sharing what would be your 3 tips that you would give to our scholars?
Sure, I don't mind at all. Like I mentioned before and multiple times, we're not a bank, right? We're not a traditional lender. The 3 things that I have mentioned over and over that I think will serve you super well in any of these situations is, again, being vulnerable, being able to build that relationship and that trust with the people that you're seeking capital from, being able to be open about what your experiences in the past have been and why things might look a certain way, because they're going to ask those questions. For KIVA too, it's a lot of hard work. It's a lot to put in a lot of effort into the strategy and to really build your business through a large scale global marketing campaign, right? If you want to think about it that way. But if you don't think about it that way, then you're not leveraging the maximum capacity of this platform for your business. So be ready to work hard and connect with your folks and The last part of it is communicate. Make sure you communicate and stay in touch with folks. The lenders, the individual lenders, me as, you know, the person supporting you through this process, or your business banker, whoever it is, make sure that you continue to communicate with them, because then they'll know the true stories behind what you're going through and be able to advocate for you more on the other end.
Thank you, Kaetlyn. And thanks for always being, just consistently being supportive of entrepreneurs here in this area. Thank you so much. All right, next, Mac, do you mind giving a little bit of advice to our scholars?
I don't know if I have 3 pieces of advice, but I do have one critical piece of advice, right? Entrepreneurship is hard. Running a business is difficult. It's even more difficult during the time of COVID, right? We're all stuck in our houses and everything. So what you need to make sure you do, and this is critically important, whatever it is that you do to de-stress, don't stop doing it. If it's going for a run, if it's working out, if it's watching a movie, whatever it is, if it's cooking, I don't care what it is. Whatever it is, don't ever let your business make you so busy that you overwork your self-care. Don't outwork yourself. Make time for yourself. Even if that means you got to go to your calendar and put time on your calendar every day, like I'm going for a 20-minute walk at this time, right? Like if you got to do it, put it on your calendar. I don't care how you set it up, but don't stop doing what you need to do to de-stress, because it's real easy to get caught up in the day-to-day of running the business, because no matter what you do, there's always going to be more work. You could work 23 hours a day and only sleep for 1 and wake up with more work. It ain't going to change. It never stops. So you need to make that space for yourself.
Excellent advice. I call it paying myself first. That's part of my payment to myself, because health, none of this money is any good if you're sick and you're not able to, really enjoy your life. So that is excellent advice, Mac. Thank you for that. And thanks for always also being a great advocate for businesses here in this area. All right. So next, Ms. Kelly Swann, do you mind giving some parting advice?
Absolutely. So my advice is always about, in reference to networking, your network is your net worth. I have met so many talented people, and it has gotten me into doors that I never thought I would be in, rooms that I never thought I would be in. So never be afraid to network and reach out if you have questions. No question is dumb. I've always felt that way, because somebody else may be thinking the same thing. Just too afraid to ask. So never be afraid to ask a question and to, and I think it was Kaetlyn that said it, be a little vulnerable. It's okay. We're all in this together. We're all trying to, get our businesses, keep our businesses afloat. We're all trying to make sure that, we are, making sure that we are, as Max said, staying healthy and strong. So it is never a bad idea to ask a question. It is never a bad idea to reach out. It is never a bad idea to meet people who are unlike yourself and to build those strong bonds. I think it was Jim that said, or maybe it was Jan that said, make sure you have a good relationship with your banker, make sure you have a good accountant, make sure you have a good attorney, a good consultant. All those people are essential to your business. So that is my advice.
Thank you, Kelly. And thank you for 2 great nights of really informing us. I learned a lot from you. And I know that your contact information is in the chat. So, and we're also, I'm going to be absolutely recording this. So I'll be making these available. I think there's a lot of people can really benefit from what you shared with us. And thank you so much for being on the panel. All right. So last night, I think Jan she gave our final last words last night. They were so eloquent. So I'm going to, and I know Jim is also very eloquent as well. So but I know Jan really wrapped us up well last night. So I'm going to ask her to be last again. Mr. Peterson, sir, would you mind giving us share a little bit of wisdom, sir?
Yeah, just 3? Oh, man.
I know it's difficult. I know.
Yeah. Okay. So I'm going to start with this. And I said it last night, and I say it all the time. Answers are easy, right? So take the time to do the homework and find the right questions to ask. A lot of people tell you, lot of coaches will tell you, I'm sure Will has worked with you on your elevator pitch, right? So you need to work on the questions you would ask somebody if you had the opportunity, right? So not just your pitch, if you happen to have, if you're on an elevator with somebody who can help you grow your business, and it's not just the pitch all the time, it's what question would you ask them? You know, if you had an opportunity to spend a few seconds with Warren Buffett, what would you ask them? If you had the opportunity to spend some time with somebody in your industry who could help you, you know, what are the questions you would ask them? So you want to take your time and get prepared and always have those questions ready. I'm sure that Will has experiences. I have a ton of experiences where people break their neck to get to me. And then when they have an opportunity to spend some time with me, they don't know what to ask me. I say, well, how can I help you? I want to grow my business. You know, how? You know, take the time and figure out what questions you need to ask. So that's one. Two is find somebody in your industry. Again, I mentioned it earlier. Find an old head. Find somebody who's already done what you've done. Reach out to them. You know, today people call it mentors. Call it whatever you want to call it. But find somebody who's been down that road, and you'll be surprised how helpful they'll be to you. In times like right now, my third suggestion would be is to take care of your vendors and your customers, right? When things get hard, your vendors is what's going to help you get through these times, right? I brought my business through 2001 and in 2008, two great downturns in the economy. And at that time, I didn't have to go get a loan from, even though I banked with M&T at the time, I didn't have to go get a loan from M&T Bank because my vendors, you know, I had such a good relationship with them that they gave me the credit that I need. They said, Jim, here's the material. Go ahead and do the job. I had to work, right? I couldn't afford to pay them for the materials. So they said, hey, Jim, hey, listen, we understand. Here's the material. Do what you got to do. Keep moving. Because the alternative is that I go bankrupt and nobody gets paid, right? So when you have that relationship, you can lean on your vendors, but build that relationship ahead of time for just in case, right? For those what ifs. Take care of your customers. A lot of small businesses, I'm sure Kaetlyn can tell you, you know, we know some of the same small business owners who would not have got through this period without their customers. I mean, people who didn't even need to go out and eat were going out and eat because just to take care of those small businesses, you know, people were shopping and buying things and still are shopping and buying things that they don't necessarily have to buy. But they like that business owner so much. They like the fact that they're taking care of those small businesses so much that they're gonna support them in that way. So take care of your vendors, take care of your customers, and I guess I'll leave it. So 3A would be invest in yourself, like the classes that you're taking now, like educating yourself in accounting. You know, take a QuickBooks class. Know your industry. All right. Know what's going on in the industry. I'm sure Will can give you some suggestions on how to do some research on your industry. But know what's going on. Be aware of what's going on, and know your competitors at the same time. And don't just know your competitors, but know your competitors' customers. Because when times get tight and there are no new customers to get, you might have to go after your competitors' customers, right? So know what they like too, and know why you're differentiating your business. Your competitors are different from yours, and know how you can attract their customers if you had to. So that's enough.
Thank you, Jim. And always. All right, and then finally, Jan, do you mind closing us out with some words of wisdom?
Sure. And so I will start by saying congratulations, right? Takes a lot of courage, a lot of hard work, a lot of determination to be a business owner. And I said this last night, you wear so many hats in your business, sometimes it can make you dizzy, right? But I would say this, stop, just like Max said, and celebrate your wins in your business, right? You have almost completed this class. When you hit exit and you leave this session, take a minute. Whether you drink a beer or whether you drink wine, You need to celebrate because you have made an investment in your business, right? You're not seeing the returns on the investment right now, but this will pay off. And so I encourage you, celebrate those milestones in your business. Celebrate when you pick up the phone and you said, I'm going to call somebody today, and you call them. And even if you left a message, celebrate that because it's important. That will keep you on the path of just, okay, all right, I did this activity today. I'm going to look forward to doing this activity tomorrow. You got to pump yourself up, right? You've got to be your own cheerleader. And if you are not, make sure that you are surrounding yourself with cheerleaders. I said this last night. You know, you were given a vision. This is not by accident that you're a business owner. You have a purpose and you need to execute on whatever this purpose is. There's a plan that has been predetermined for your life. And part of that is being a business owner right now. So guess what? Celebrate that. Do not let anyone douse your fire. And I said last night, the pandemic may turn your fire into smoke. And okay, it happens, right? But inside of that smoke is a small ember, right? And so surround yourself with people that are going to fan that back into a flame. And you yourself fan that back into a fire and blaze a trail. You are building an empire, right? You are the CEO of your organization. Run with it. You can do this, right? It is not impossible unless you yourself think it's impossible. It is very possible for you to be successful in this space. So congratulate yourself, and I look forward to seeing you building this magnificent empire in the great state of Maryland. Thank you, Will.
Well, I think that's where we would drop the mic on that and just wrap up. That was amazing. Thank you, Jan. Thank you, Jim. Thank you, Kaetlyn. Thank you, Kelly. Thank you, Mac. You guys are always amazing, and I appreciate you so much. Nothing but love. And we're going to wrap up now. This has been the session 6, our actual last class of cohort 1, track 2. This is the Baltimore Means Business program brought to you by Oregon State University Orgrave School of Business. I'm your facilitator, Will Holmes. Thank you so much, and thank you for listening. Good night.